I did a video recently on the top 10 stocks to buy for 2025, and one of those stocks is on my watch list that I am considering buying. And I wanted to share with you a fascinating piece the Wall Street Journal did on this company, and then cover some financial data, all leading to my current stance on this stock, if it's a buy or not. Now, the company is ASML, and it's a very unique company offering a unique product like no one else in the world. So it's very fascinating, this company. We're going to get to learn about this company through this article, so let's get started. The title of this article is "It's the most indispensable machine in the world, and it depends on this woman." This employee, her name is Brianna Hall, and they kind of talk about her experience with the company. They talk about the machine itself, how important it is. So we're going to now see that Brianna Hall is considered the most valuable role that you'll never see at the most vital company that you've never heard of. The article goes on to say, until she began working at ASML last year, she didn't know the first thing about the company. She also didn't know what she would be doing as a customer support engineer, a fancy mechanic as she calls it. And she had absolutely no idea it would be essential to the global economy. When she reports for her shift at a chip plant, Hall slips into a bunny suit. Now, my mom used to work at Intel, and she had to get into a bunny suit, and it's to prevent any kind of contamination from getting into those rooms where they make the chips. So this girl, Brianna, she enters a room where the pristine air is 100 times cleaner than a hospital operating rooms. Then she makes her way over to the unfathomably complex machine. Her job is to know everything about it so that she can fix it. She said, "I thought I had the coolest job ever. I didn't process the fact that this job is necessary for our entire world to exist as it does." So obviously, this article is really showing you that there's a big importance that this company provides through a product to the world. And it's very true, and you're going to see that as we go on. The article goes on to say the piece of equipment that the entire world has come to rely on, and she is specifically trained to handle, is called an extreme ultraviolet lithography machine. It's a machine that produces the most advanced microchips on the planet. It was built with scientific technologies that sound more like science fiction. Breakthroughs so improbable that they were once dismissed as impossible, and it has transformed wafers of silicon into the engines of modern life. Even today, there are only a few hundred of these EUV machines in existence, and they are ludicrously expensive. The one that Hall maintains costs $170 million, while the latest models sell for roughly $370 million. I've heard of above $400 million. But maybe the most remarkable thing about these invaluable machines is that they're all made by the same company, ASML. So I'm going to stop right there for a second. These machines are made by one company, ASML. The whole world depends on these. The chip making process, this part of it is essential, and ASML is literally the only company. There's a few others, but I'm going to talk about that. They're so far ahead from the other companies. They really have the competitive advantage, that wide moat in this area, and that's what got me looking into this company. I was like, wow, I like to hold companies that have monopolies, have a wide moat, that competitive advantage. This company definitely has that. So ASML is the glue holding the chip business together. That's because this one Dutch company is responsible for all of the EUV lithography systems that help make the chips in so many of your devices, like your phone, your computer, your tablet, and your TV, and maybe your car too, depending on what you drive. These machines have become indispensable, and they depend on the invisible work of Brianna Hall. She's one of the engineers assigned to the fabrication plants or fabs where ASML customers manufacture their semiconductors. As we continue with this article, it says, EUV machines aren't so much a marvel as they are a miracle. Their original story begins 40 years ago in a leaky shed in the Netherlands with the birth of advanced semiconductor materials lithography, now simply ASML. Back then, printing chips with extreme ultraviolet light was a fantastical idea. Making it a reality would require more time and money than the visionaries who dreamed up this magical technology could have possibly foreseen. It's a process that involves vaporizing droplets of molten tin and producing light that doesn't occur naturally on Earth, or at least that's the simplest way to understand the extremely intricate science of extreme ultraviolet lithography. The droplets get zapped by twin laser pulses, explosions that happen 50,000 times a second. The first pulse flattens them. The second one obliterates them into a plasma that emits the EUV light. The light is then collected using the smoothest mirrors ever invented and directed towards the silicon wafer to etch billions of microscopic transistor patterns. The existential question of the semiconductor industry is how to pack more and more of those transistors on chips to make them faster and faster. The answer? Short and shorter wavelengths of light. ASML's first lithography tools created light at wavelengths of 436 nanometers. The current machines have shrunk that to 13.5 nanometers. This allows them to fabricate chips at resolutions 10,000 times finer than a human hair. Mind blown. This is amazing. This is the innovation at its best, and I just love that. That's also what kind of drew me to this company. This is fascinating. This is them defying what others said could not be done, and they're doing it, and they're succeeding, and they're accelerating. That is something that I like to see with my companies, and that shows their success thus far. If we continue on, it says from the author, there are two things I've learned about the EUV tool I saw that I can't get out of my head. One, ASML teamed up with a German optical company to develop mirrors so flat that if they were scaled up to the size of Germany itself, their largest imperfection would be less than a millimeter. And number two, the precision of EUV machines is comparable to directing a laser beam from your house and hitting a ping pong ball on the moon. Again, this is fascinating, and the fact that we are inventing things like this and there's this company that we can invest in is pretty cool. If we continue with this article, it says it took decades for these absurdly sophisticated machines to make their way from labs to fabs, and until recently, it wasn't clear if the company's audacious bet on EUV lithography would ever pay off. In 2012, ASML was strapped for cash and sold a 23% equity stake to Intel, Samsung Electronics, and Taiwan Semiconductor Manufacturing. And just to pause there for a second, these are its current three main customers. Now, this meant its biggest customers were literally invested in the company's success. ASML soon ramped up production very, very slowly. The company delivered the first EUV system in 2010. Not until 2020 did it deliver the 100th system. And last year was a busy one. ASML shipped a total of 42 EUV machines. So we're seeing them pick up with these units being sold, and there are still only 6 companies that own these machines for chip manufacturing, but many others indirectly depend on ASML, including the most valuable companies in history. Apple and Nvidia both design their own chips and outsource production to the fabs of TSMC, which means ASML's tech is pivotal for making everything from AI data centers to iPhones. AI is the future. ASML is going to get a big chunk of that. EUV machines have become so crucial that the company now employs an army of 10,000 customer support employees to keep them humming. They are the frontline troops of ASML. So right here, just knowing that they are critical for those companies pursuing AI shows the importance of this company, and the future of this company will be very, very strong. Now, as we continue, this is the last bit that I'm going to talk about with this article. It says ASML's clients expect their lithography tools to be operating day and night, but disruptions are inevitable and unpredictable. TSMC worries about earthquakes. Intel once traced a lithography issue back to another kind of rumble, a shift in wind patterns that was carrying over methane gas from nearby dairy farms. Yes, it says here, cow farts. Now, bovine flatulence aside, malfunctions are rare, but the EUV machine is the bottleneck of every fab. The entire factory gets backed up if it goes down, which is why ASML employs people around the clock all over the world, people like Brianna Hall. So there's the case and proof just how important these machines are, also just how delicate they can be at the same time. So before we dive into the financials and stuff, I want to put some additional perspectives with ASML as an investment. Now, I have heard from a few sources that ASML could take a page from Netflix and stop reporting quarterly orders of their machines. Netflix will stop reporting subscriber counts starting with 2025 financials. Now, if they stop reporting the number of orders for their machines, this may create initial negative sentiment with investors, but long term could smooth volatility with this company stock as orders of these machines do swing wildly because they're expensive, they're big units, and it's not like they're being bought like hotcakes month after month, like, fast food or something. And they rather have investors focus on the revenue growth instead if they were to make a move like that. And I do think that could be a smart thing because as an investor, if they could smooth out the stock by just focusing on revenue, if they're confident they can grow that revenue pretty smoothly year after year, I would like that. But there is part of me that likes to see the statistics of things like subscriber growth or units sold, so I would miss that part. Now, if we look at their stock, we will see the volatility. This is 5 years, and you can see the big swings up and down and up and down and up and down. And recently it fell because they did say they expect 2025 growth in revenue to kind of slow down, and so investors reacted. But again, if they just produce revenue instead of units sold, then this will be a lot smoother going forward. If not, you have to expect some volatility with this stock. Now let's get into some financials. Let's look at their dividend. Yes, they pay a dividend, and their yield is 0.91%. The 1-year growth is 4.05%, and the 5-year growth is 13.83%. So it's got a massive slowdown this last year, and I think that's because of their outlook with a slowdown in their sales. And that's okay. This company's probably just protecting itself up front and saying, let's see what happens. And I bet you they'll raise it up again into the double digits when the cash flows and the revenue kind of returns to some high growth. Now, the payout ratio is 33.15%. That is very healthy. Anything below 50 to me says it's a safe dividend. Now, if we look at the stock facts, this is a chart I created to mimic nutrition facts because I thought it's an easy to read. So their market cap is about $291.4 billion. They're right now trading in the $720 to $730 range. Now their PE, trailing 12 months, is 40.42, and the PE 5-year average is 41.24. So really they're in line, maybe slightly less, so you can see a little bit of a value. But I will put this in there too. I don't have it on this chart, but their forward price to earnings PE ratio was 29.32, which is higher than the industry average of 27.24. So it may look like ASML is still trading at a premium, but regardless, right now you might see it that way, but I think looking into the future, this company is at a good valuation. Now, price per operating cash flow is at 32.22. That is a little pricey, but the cash flow growth over the last 5 years is 22.41. That's excellent. Now, the revenue change year over year, the growth is 11.9%, and over the last 5 years, it's 19.44. So a little bit of a slowdown, but analysts are predicting going forward, it should stay in this low double-digit range. Now, gross margins are beautiful. That is a very beautiful gross margin at 50.8%. I'm going to skip down to at the operating margin at 30.77. These are great numbers that show great profitability for this company, and they're expected to keep this up. So that's a good sign. Return on equity is excellent at 50.22, and total debt to equity is 32.3. So they don't have a debt issue. This is all great, and I already talked about the dividend information there at the bottom. Now, if we look at free cash flows, this is important because a company can use their free cash flows to reinvest in the company to pay those dividends or buy back shares. And we'll see here that the cash flows over the last 5 years, it looks like a speed bump. They shot up and then shot right back down. But that free cash flows of $3.1 billion currently is still a large amount. And then that dotted blue line is the stock price. So we see a little bit of deviation there at the end. So either two things will happen. The free cash flows will catch up to the stock price, or the stock price will go down and catch up with the free cash flows. I think it's going to be the free cash flows going right back up and catching up to that stock price. That's what I'm betting on, but you have to do your own analysis and determine what you think. Now I want to talk about my bullish and bearish take, and then I'm going to show you the price targets for this company. Now my bullish take. These machines are complex and expensive, meaning that customers are unlikely to switch to any future competitors, and that brings in strong future service revenue. It's dependable. These machines last more than 30 years, so that adds stability to their revenue stream. All other competitors are estimated to be 10 to 20 years behind ASML, meaning they may never catch up. The future will require more microchips as more and more devices and products will require them because we want everything to be faster and faster, and ASML is the only main player capturing the majority market share. This equates to massive future profit potential. It's a buy now, thank yourself later situation. And one last bullish point, the stock is trading in the low $700 range. There's also an argument to be said that they might do a stock split, which always is beneficial for a company because it makes it more available, and that means more people might buy it. So that's something to consider. Now my bearish stances. These machines are complex yet fragile to their environments and could cause a huge backlog should any natural disasters disrupt these machines' ability to operate. The semiconductor industry is also cyclical, so you have to expect volatility. But if they change to getting rid of those counts of units sold and just show revenue, that might smooth it out for us investors, but we don't know that they will do that. ASML depends on a limited number of suppliers, so disruptions could be costly, and that's something people might not think about. They don't make everything for these machines. They have to get supplies from other places, and some of those supplies are hard to get. Also, if barriers occur that would make exports to China more difficult, ASML could suffer because they are a big customer. As well as ASML sells a low volume, high priced product. They need to stay far ahead of competitors to keep their customers. They can't let anyone catch up. So that means that they have to be pressed on innovation and efficiency. Now, if any disruptions come to this company, it may be disastrous for investors. So that's something to keep in mind. Now let's look at the price target. Right now, it's in the outperform range. It has a 19.3% upside potential. Again, it's trading in the $720 to $730 range. They have a low of $694 and a high of $1,088 and an average of about $800 and let's say $50. So I absolutely think this stock by the end of this year will be in the $800 range, but I think it has the potential to outperform and get even higher than that. So that is something that I'm considering in my possible purchase of this stock. And I want to give you my final take on this. It's that it's a great investment opportunity with medium risk. A lot of the companies I hold in my portfolio that you see right here, I'll show this right now, are low risk. Microsoft, Amazon, S&P Global, Union Pacific, these all have wide moats and also diverse sources of revenue. Unlike ASML, they depend heavily on this one product, their lithography machine. So it's one that most likely is a long-term winner with unlikely downside. I am waiting till their earnings to see how things are going and will decide if I buy into this unique company in the months following. Now their earnings, they will report them on January 29th. So if you're interested in the stock or you own this stock and aren't aware, put that on your calendar. And also let me know your thoughts on ASML. Do you hold it currently? Do you think it's a buy? What are your bullish and bearish takes on this company? I don't know everything. I go off of my own research. So you might present something to me that will make me more bullish and more likely to buy. Or maybe you present something to me that might say, wait, maybe I should hold off on buying this company and look into it a little bit more. So please share those things and be sure to subscribe to my channel for more content like this. I appreciate all you that subscribe and I want to wish you all happy investing, and we're entering some big earning weeks coming up. So good luck out there and we'll see you soon on Mark Arnold's Finance.